let us start with branch accounts. Maybe when you are hearing the regular chapter, in other words, branch accounts in your regular classes, now you might have observed how many hours discussion might have been done. So it was so huge, number of topics will be there. Actually, we divide into two chapters, dependent and independent. For ICAI, only one chapter called branch accounts. Now the chapter is so big and many topics are there. So it looks huge and many students feel it difficult and leave it for exam also. Now let me tell you one thing. Sir, when you feel any chapter is so big, at least look at the areas in which they are asking examination. They are asking in examination. Usually in branch accounts, though there are many concepts, from 5 or 6 limited concepts only they are regularly asking the questions. 80% of the times they are asking just from 5 or 6 concepts. The balance 20% they are moving to any deep area. So when we are not having time, it is wise to prepare at least those important areas. Now what I am going to do is, I am also going to cover those important areas. Now what are those important areas, sir? Let me tell you, usually in examination, either they will ask you to follow debtors method. Which method, sir? In the case of dependent branches, the debtors method, or stock and debtors method. Trading and P&L, for learning sake we will learn it, but none of the examinations they will ask it, sir, usually. Most of the times they concentrate on debtors and stock and debtors method. This is what from dependent branches. When I come to independent branches, usually they focus on, one is, there will be one question, sir, on inter-branch transaction. In other words, received from that branch, sent to that branch, acceptances sent, acceptances received. Like that one in tabular format, we will write a single journal entry. So that question, and reconciliation entries will be there. Reconciliation or rectification entries also we can say. There will be a question which covers rectification entries. And at last, foreign branches, both integral as well as non-integral. Sir, these are the topics which are frequently asked in exam. I don't say that just by preparing these concepts you can answer in the exam always, but 80% of the times you will be able to answer. 20% unless you prepare full chapters, no, you will not be able to answer. But let us leave that, sir. When the chapter is huge in size, at least we should be accurate in important aspects. So these 5 are the very, very important areas in which most of the examinations they ask the questions. So let me focus on these 5 aspects only. Are you getting the point, sir? So let me start with first one. Now these 2 aspects are from dependent branches, sir. Whereas these aspects are from independent and foreign branches. So first, let me start with dependent branches and that too debtors method. Okay. Under debtors method, what we will do, sir? We will simply prepare a branch account. Hello, what we will do? We will simply prepare a branch account. Only one account we will prepare, that too the branch account. Now why we prepare this branch account, sir? Sir, whatever method we follow, may it be debtors method, may it be stock and debtors method, may it be final accounts method or trading and P&L method, ultimately our aim is to know the performance of our branches. Ultimately our aim what, sir? To know the performance, how well they have performed. So through debtors method also, what we are going to learn is performance, nothing but the profits of the branch, how much profits they have got. But in the case of dependent branches, who will maintain the records? Not the branch, but head office itself will maintain the records by maintaining in the form of a single account called what, sir? Branch account. What is that? Branch account. Now, how we will record transactions in this method? let me tell you one thing, sir. There is one simple logic involved in debtors method. What is happening in debtors method? Now, if you understand that logic, whatever twists they give in the examination also, you will be able to understand. Now, what is that logic, sir? Let me tell you, in debtors method, to find the profit or loss, we will apply capital comparison method. Something I have said. What I have said? In debtors method, to find the profit or loss, we will apply the capital comparison method which you have learnt in accounts from incomplete records. Morning I have not discussed it. Now this will be the part of the discussion, sir. Anyway, we are discussing now that capital comparison method. Do you remember that capital comparison method, sir? Now, how do you find profit or loss in capital comparison method? Generally, we know one thing, sir. Opening capital, hello, plus profit, hello, everybody. Opening capital plus net profit minus drawings should give you what, sir? Closing capital. Am I right or not? Of course, any additional capital we will add. Opening capital plus profit plus additional capital minus drawings should give you what, sir? Closing capital. This is not capital comparison method also. Simply what you have learnt in your childhood, foundation level itself, you might have learnt capital computation like this in partnership also number of times. Opening capital plus profit plus additional capital minus drawings gives you what, sir? Closing capital. I'll just change the equation because I want to find profit. What I want to find? Profit. Can I write like this? Closing capital. We will add drawings. We will reduce additional capital, we will reduce opening capital, we will get profits. Am I right or not? Simply I have changed the equation where I want to find net profit. Except this, I have just brought all these things to that side. I have got the net profit. In fact, this method is popularly called as capital comparison because we are mainly doing the capital comparison only. Opening capital, closing capital. Like that, some comparison is being done. So popularly, this method is called capital comparison method. Sir, this method clear? Now let me show you how the same method is there in our debtors method. In debtors method, we are applying the same, sir, to find the profit or loss. How, sir? I'll just tell you. Look here carefully. What we are writing here, sir? Opening capital. Hello, what is that? Opening capital. Please understand, here opening capital means capital employed in the business. Now please understand. Now here we are feeling that branch is our business. We are investing our amount in the branch. Hello, we are investing our amount in the branch. How do you invest amount in the branch? In the form of assets, or you will give some cash. Either you will place cash or you will place any assets. Am I right or not? So that is what, please observe carefully, I will write as opening balances of various assets, sir. Two various opening balances, which is stock, maybe cash, maybe any other fixed assets. This gives my opening capital. Accepted? What I am writing there? Opening capital. Now similarly, I think in this method, we will also write closing balances, sir. By closing balances of my stock, my cash, my fixed assets. This indicates what, sir? Closing capital. Sir, in debtors method, you will write opening balances of various assets. Of course, liabilities, sir, because net assets only we consider. Here also, closing balances, of course, liabilities also. So, opening balance and closing balances. This I want to call as opening capital. This I want to call as closing capital. Sir, accepted? Next. Sir, during the year you may introduce some additional capital, no? During the year you may introduce some additional capital. How do you introduce any additional capital? That means once again, afresh you have given some cash to the branch or goods to the branch. Sir, are you getting the point, sir? Usually we bear the expenses of branch directly. Now look here carefully. If you have given any goods, is it not some investment in the branch? Is it not like additional capital during the year? Yes. So if there are any goods sent to branch, hello, Hello, are you getting the point, sir? If there are any goods sent to branch, of course we are writing branch account, so maybe you can write goods received from head office also. Are you getting the point, sir? If there are any goods sent or sent to branch, or you can also call received from head office, that you will record. Similarly, whenever that goods are returned, hello, that means you are giving back the goods, or after doing some sales, sir, you have given some assets, you have given some cash. Using that, what the branch will do, they will do the business and they will generate the sales. Out of the sales, what they will do, sir, the amount they will return back to the branch, sorry, head office. Are you getting the point, sir? Now, if they have remitted any cash, hello, what is that? If they have remitted any cash, that means given back, or any goods were returned, hello, what is that? Any goods were returned. Now, I can say this is like drawings. Hello, what, sir? This is like drawings. Now, this is like additional capital. Of course, not only goods, sir. Suppose you bear any expenses for branch. Suppose you have incurred some expenses like salaries, rent, any rent, etc. Now, if you are incurring for branch, that means once again you are spending some amount on the branch. If you are incurring some expenses, once again you are spending some amount, or if you have made directly purchases, now for branch, once again you are spending some amount on branch. Now all these things are called as additional capital. Sir, are you getting the point? Now we will write the balancing figure as the profit, sir. This is what we prepare under debtors method. I'll show you the format. Maybe you might have seen the format like this, sir, where we write opening balances, closing balances, goods sent or received, similarly goods returned, cash remittances, cash sent, similarly any expenses incurred by head office. Then you will write balancing figure as the profit or loss. Now you will find this as profit or loss, but what I am telling is how you are getting that as profit or loss. Logic behind that I am telling, sir. It is which method which is being applied here? Capital comparison. You look here, what is happening? Closing capital, we are adding drawings, we are reducing opening capital, we are reducing additional capital. Ultimately, we are finding the net profit. So in debtors method, what we are applying is capital comparison method. In this way, we prepare in debtors method. This is the basic theme of the debtors method. Sir, have you all understood? Sir, everybody, is that clear? Already you might have learnt in one or the other way, sir. I'm just giving you the logic for that. If you have learnt it, very good. If you have not learnt it already, now learn. Hello? Is that clear, sir? Now, let me proceed. Let us proceed, sir. Look here carefully. Sir, in this way we apply debtors method, but just knowing the format itself is not sufficient, sir. We should know some adjustments which may be there in the questions. Because in one question, one adjustment they will consider, in another question they will not consider. Like that, some issues will be there, sir. Let me clarify you few points for debtors method. Look here carefully. Sir, in debtors method, when we write in branch account, what transactions we write is only those transactions which occurs between head office and branch. Something I have said. What we'll write, sir? Only those transactions between head office and branch. Any other transactions we don't record, sir. That means, suppose branch had done some sales, branch had done some purchases, branch done sales, purchases, branch incurred any expenses. Now will we record, sir? No. Now all these things will not be written. Only the transactions between holding. If you send goods, if you send cash, if you receive cash, if you receive goods, now all those things will be written, but not any what, sir? Transactions done by branch. Sir, is that clear, everybody? Now you may get one more point. Sir, in some questions, they may say salaries incurred, rent incurred, but still they write in debtors method. Now why, sir? Let me give one clarity, sir. Sir, in branch, we generally incur various expenses, sir. If branch expenses incurred by branch only. It will not be there in debtors method. Hello, are you getting the point, sir? If branch expenses incurred by head office, that means indirectly here the transaction between head office and branch only, sir. If you are incurring the branch expenses, it is like you investing in them only. In such a case, it will be recorded. Maybe at the beginning of the question, they will mention all the expenses at the branch will be met by head office. Like that, they will mention, sir. If they have mentioned like that, whatever expenses are there, you will record in debtors method. Otherwise, you will not record in debtors method. This is one point you should remember, sir. Only those transactions between head office and branch we will record, sir. So if it is done directly by branch, we will not record. Similarly, branch expenses whatever are there, if incurred by branch, we will not record. If incurred by head office, we will record. Sir, is this point clear, sir? This is also one of the issues, sir. Next, sir, everything is well and good when we are moving in cost method, which at cost price. What is that? Cost price. The same can be maintained at invoice price also. Hello, what is that? The same can be maintained at invoice price. Now, if you are recording this at invoice price, only one change will be there, sir. Entire procedure will be same. Only one change will be there. What is that change, sir? Wherever goods related entries are there, for that we will apply loading. Something I have said. Please observe carefully what I am telling, sir. If recorded invoice price, what you will record at invoice price, sir? Goods only. Hello, will you record expense at invoice price? Will you record any other things at invoice, opening balance at invoice price? Of course, please understand. Now, opening stock, etc. may be recorded. Opening cash will be recorded at invoice price. No. What will be recorded at invoice price only is stock related items. What are the stock related items you will record? To opening stock. That is stock related item. By closing stock. Similarly, to goods, whatever goods received. Similarly, by goods returned. So usually these are the items in which are recorded at invoice price. Tell me, when we will get proper net profit, sir? If they are recorded invoice price or cost price? Cost price. If they are recorded invoice price, we will not get proper profit. That's why what we will do to ensure that we get the proper profit, whatever extra amount was there other than the cost portion, that means whatever loading was there, we will reverse. Suppose opening stock is recorded at 1 lakh plus 20,000 is loading, 1 lakh 20, then we will immediately write by loading on opening stock, by opening stock reserve. Like that we will write by opening stock reserve 20,000, so that this loading will be removed. Similarly, closing also, we will write to closing stock reserve. Whatever loading was there, that loading we will remove, so that even for goods sent also, even for goods returned also, for everything, we will remove the loading by writing on the opposite side. Hello? By writing on the opposite side, we'll remove the loading. Once we remove the loading, what will happen, sir? Then everything will be at cost. You can complete your procedure of finding the profit or loss. Sir, have you all understood, sir? That's all. These are the main points in debtors method. Let us quickly solve a question. Let me show you a question, sir. Okay. This is question number 1, sir. I'll just open the solution and show you simultaneously. Now look here, sir. Here the invoicing is done at what, sir? Cost. The goods are sent at cost. Head office paid all the branch expenses from its bank account except petty cash expenses which were met by bank. Okay. The following is the summary of the transactions entered into at a branch. Now look here carefully. First, opening stock is given, opening debtors is given, opening petty cash is given, where we'll write 2 opening balances. We'll write all these 3. Similarly, goods sent from head office, that means received for us. Goods returned. Sent we will write on the debit side, returns we will write on the credit side. We are maintaining at cost only, sir, so no loading. Cash sales and credit sales, will we record, sir? No. Hello? These are done by branch, sir. We will not do anything. Next, allowances to customers, discounts to customers, everything not between holding and subsidiary will not be recorded. Bad debts also not recorded. Goods returned by customers also not recorded. It should be between holding and subset. Think one point, is it an additional capital or drawings? Because already opening capital, closing capital over. It should be either an additional capital or it should be a drawings. Then only we will consider, then only we can get net profit. Now these will never contribute as additional capital or drawings. Next, salaries, wages, rent, rates and taxes, sundry expenses. If they are incurred by branch, we don't record, sir. But because clearly given head office have paid all the branch expense, now we'll record all those expenses to bank, salaries and wages, rent and rates, sundry expenses. So discussion clear? The next, whatever closing balances, of course, cash received from debtors. This is also not between holding and this is also not between branch and head office, so not required. Then all those three closing balances has to be recorded. So we'll record all the three closing. So that's all, everything is recorded, sir. Now collection, whatever cash remittance, it has to be recorded. Hello, what is that? Cash remittance. Now here, if you observe, you have to always find cash remittance. Have they given any cash given to, hello, cash remitted to head office, have they given, sir? No. But please understand, when you have got something, drawings should definitely be there. You have got something, sir. If it is not there in the closing, drawings should be there. Please understand. Now you have got cash sales, but is it lying in the closing balance? No. In fact, they have said clearly, only petty cash will be there with the branch. All the cash collected by the branch was banked on the same day to the credit of head office. That means whatever received by branch will be sent to head office. So cash sent to head office has to be recorded. What will be sent, sir? Cash received. What is the cash received? Either your cash sales or collection from debtors. So together, cash sales plus collection from debtors, 17,500 plus 28,500 will be nothing but the cash remittance. That we will write cash sales as well as cash from debtors. This we will write as cash remittance. Once we record all those things, we will get the balancing figure as the net profit. Sir, have you understood this debtors method, sir? So these are the main points, sir. Just look at this cash remittance. Sometimes they may not say in the question clearly, but please understand, if you have collected cash, if it is not there in the closing, definitely that cash might have been remitted. Some questions you need to take that assumption that cash was being remitted to the head office, because then only proper drawings you can indicate, otherwise proper net profit cannot be computed. So hope everybody have understood. Shall I proceed to stock and debtors method, sir? Sir, if it is invoice price method, I have said you, only for this loading will be reversed. Similarly, for closing stock, loading will be reversed. Similarly, for goods sent, loading will be reversed by writing on the opposite side. Similarly, for this 1,000, loading will be reversed by writing on the debit side. Just the loadings will be reversed, sir. Nothing new if it is at invoice price. So let me move to the next method. What is that, sir? Stock and debtors method. Okay. So what we will do in stock and debtors method, sir? See, whether it is debtors method or stock and debtors method, ultimately everybody wants to know profit or loss, but they want some detailed records. If anybody wants some detailed records, because in debtors method what we are maintaining, only opening balances, closing balances, records between head office and branch. No other records we are maintaining. If we need some detailed records, just like all the transactions happened at branch, like branch sales, maybe branch expenses, then it is better to go for another method called as stock and debtors method. In this method, we maintain in a detailed manner by maintaining more and more accounts. What accounts we will maintain, sir? Very simple. For remembering, I will tell you, sir. Generally, in a balance sheet, what are the items, sir? Stock, debtors, cash, fixed assets. Am I right or not? Now similarly, capital, P&L, liabilities, etc. will be there. Now I can tell you what are the items we maintain here. So it will be branch cash, because we record these details of branch. That's why we maintained all these branch items, sir. One is branch cash, the other one is branch debtors, the other one is branch stock, the other one is branch fixed assets if required. Similarly, branch P&L. Hello, what is that? Branch P&L. Now, in addition to this, if there are any branch expenses, hello, what is that? If there are any branch expenses, we will maintain branch expenses. And one more last point is, because we are recording in head office, please understand, whatever goods we are sending to branch, it is goods from where, sir? Where you have got that goods? If you are sending some goods to branch as a head office, from where you have got that goods, sir? Is it manufactured? No. Generally, you might have purchased. So, generally, such goods sent to branch one or the other time to be adjusted against purchases. Because head office might have done some purchases, sir. Out of that purchase only they are sending some goods, no? So, that goods sent has to be adjusted one or the other day against what, sir? Purchases or trading account. We'll write either buy goods sent to branch or here less goods sent to branch. That's why we maintain another account also called goods sent to branch. Sir, is that clear, sir? Like this, totally 7 accounts are usually maintained. What are the 7 accounts, sir? Branch stock, branch debtors, branch cash, branch fixed assets, branch P&L, branch expenses, goods sent to branch. But of course, depending on the question, if they have not given some information, suppose fixed assets information not given, then we will not maintain branch fixed assets. So, goods sent to branch, sometimes they may not ask in the question, then you may not write goods sent to branch. So, if they have asked to prepare specific ledger accounts, you will prepare only that. If they don't ask, we'll try to prepare all the 7 accounts, because sometimes they'll ask in the question to prepare necessary ledgers under stock and debtors method. They'll simply use this sentence. What is that? Prepare necessary ledgers under stock and debtors. Then you should know what ledgers will be prepared. So these are the ledger accounts that will be prepared. Sir, have you all understood, sir? Okay. Let me deal with each of these ledger accounts, sir. Most of the ledger accounts will be very simple, just like you maintain your normal accounts, sir. So let me show you one by one. First, what are the accounts we are having, sir? Branch stock, then we'll be having branch debtors, then branch cash, branch expenses, branch P&L. So these are usually very important accounts, sir, out of the 7. Here also, it is always better to open all the accounts simultaneously. Something I have said. Just like in our accounts from incomplete records, here also always better to open all the accounts simultaneously and follow the double entry principle so that you will never go wrong. So now let me tell you, sir, how the branch debtors account will behave. How a normal debtor will be there? 2 balance brought down, 2 sales, by collection from debtors. Similarly, hello, we'll write by discount, by maybe any other bad debts, everything will write or not. Same way, branch debtors also will be there. Are you getting the point, sir? How we will record 2 balance brought down, 2, what we'll write? Sales. Actually, we'll write what, sir? Sales. Here, generally, we'll not use the word sales, we'll use the word stock. Which account, sir? Branch stock account. Instead of sales, we use the word branch stock account, because we want some stock reconciliation, etc. I'll tell you, sir. So thereby generally we write which account, sir? Branch stock, because ultimately whether sale or stock, good is going out, asset is going out. So thereby we have to credit it. Are you getting the point, sir? To branch stock. This is for sales. Then once again, you will receive the cash, sir. If you receive the cash, by cash or branch cash, like that you will write. Similarly, what you will write, sir? Any bad debts, any discounts, any other expense, any other things you write in debtors, you will write by balance carried down. Now these expenses, these are the expenses which are considered as branch expenses, sir. So usually you write once again, you will transfer this to branch expenses, to bad debts, to discounts, and any other expenses you are having, to salaries, to rent, like that, whatever expenses branch is incurring. Sir, now I am not telling that transactions between head office and branch. Everything will be considered. So this we will transfer to branch P&L. Are you getting the point, sir? This we will simply close them by transferring to branch P&L. Now please understand, in some questions what they do is, instead of writing here bad debts, once again transferring here to branch P&L, directly they will write by branch P&L itself there. Sir, are you getting the point? Instead of writing here bad debts, discounts, once again transferring later on to branch P&L, if you want comfortably, you can write directly there only branch P&L. Nothing wrong. It's just a combined entry approach. Okay, everything is okay. Now, sir, what we should learn? Sir, branch cash account also common. To balance brought down, any cash received due to cash sales or collection from debtors, any cash paid, remittance to head office will record, will get the closing balance. Branch P&L, for that first we should know branch stock account. In fact, branch stock account is the main thing that should be discussed here, sir. What is that? Branch stock account. Now let me discuss the branch stock account, sir. Look here carefully, everybody. Sir, in the case of branch stock account, what we record here, sir? Very simple. As usual, we'll write the opening balance, to balance brought down. Similarly, any goods sent, from head office, that we will record goods sent from head office. If there are any goods returned, so by goods returned. If there are any sales, usually we have purchase and sales, sir. Here we have goods received from head office and sales. Are you getting the point, sir? So sales, what we'll write, sir? By branch stock. Sir, if it is cash sale, what is that? By branch cash. If it is cash sales. Because entry for cash sales is what, sir? Cash account debtor to sales. If it is credit sales, we'll write by branch debtors. Sir, are you getting the point? Because cash sales means cash to sales. So we will write by branch cash. If it is credit sales, by branch debtors. The same thing will be reflected in branch debtors account and branch cash account also. There we will record cash sales as well as credit sales. Are you getting the point, sir? Now, then we will write by balance carried down. Now, sir, the big point here in branch stock account is we are writing opening balance. This is recorded at cost. Goods cost. Goods return cost. Branch cash and branch debtors at selling price, sales. Balance carried at cost. Everything is recorded at cost except the unit sold to outsiders. So thereby some profit will be there. Which profit, sir? Profits on goods sold, nothing but your gross profit. What is that, sir? Gross profit. So through branch stock account, what we get under this method is gross profit. What is that, sir? Gross profit. We transfer that to branch P&L, sir. You can write as gross profit here. This gross profit where you will transfer branch P&L, or you can directly write to branch P&L. So here we will write gross profit. All these expenses we will record here, to branch expenses, various branch expenses. Then we will get the net profit. In this way, we will have branch P&L account. So any goods sent to branch account means already we might have written what, sir? Branch stock to goods sent to branch. In goods sent to branch, what we will write? By branch stock. So this will be now transferred to trading account or purchase account. If there is any returns, that also we will write. Net amount only will be transferred to purchases. In this way, we maintain goods sent to branch account. Sir, here each of the ledger accounts are simple only. It's just like regular debtors account, regular cash account, regular expenses account. Only thing you should remember is branch stock account. It just behaves like a trading account. Which account, sir? In the case of cost price method, which method? Cost price. I am not discussing invoice price. If it is at cost price method, branch stock behaves like a trading account where we record opening stock, purchases. Instead of purchase, we'll have goods received from head office, sir. Then goods returned, sales. Similarly, closing stock. Everything is there just like a trading account. Balancing figure also gross profit. It simply behaves like a what, sir? Trading account. This is maintenance of all the accounts in which method, sir? Cost price method. Now, if the same stock and debtors method at invoice price. Let us see what, sir? Stock and debtors method at which price, sir? Invoice price. Now, my discussion becomes very, very simple now after discussing in the morning session departmental accounts, markup as well as memorandum stock account. Because here, let me tell you, once again, we will have branch stock account. Instead of memorandum stock account, we'll have what? Branch stock account. Instead of memorandum markup account, we'll have another new account called branch adjustment account. Hello. Instead of those two, here we'll have these two, sir. Reflection will be same. I'll just show you how these two accounts will behave, exactly similar to what our discussion was there in the morning, sir. It will be just branch stock will be similar to memorandum stock account, whereas branch adjustment account will be similar to memorandum markup account. Now how we will record, sir? Very simple. First we will record what, sir? Branch stock. In branch stock, so what we'll record, sir? Opening stock, but this will be recorded at invoice price. Similarly, goods sent to branch, this also will be recorded invoice price. By goods returned, this also will be recorded invoice price. By sales, of course, branch cash and branch debtors, this also will be recorded invoice price, because anyway sales will be done at sales price only, invoice price only. Then we will record by balance carried down. This also will be recorded invoice price. If everything is recorded invoice price, will there be any difference? No. This account now doesn't behave like a trading account. Hello. Now this account doesn't behave like a trading account. Now this account behaves like a stock control account. Hello, because every item is maintained at the same price. Because every item is maintained at the same price. This is no more a trading account. This behaves like a stock control account, where we try to reconcile. If at all, first of all, it should be tallied. If it is not tallied, then we'll start analyzing the reasons. Sir, are you getting the point? It should be what, sir? Tallied. If not tallied, we'll analyze the reasons. Okay. Suppose not tallied. What might be the reason? Two possibilities are there. Hello. If it is not tallying, two possibilities are there. One is credit side greater than debit side. Second one, of course, popularly debit side will be greater than credit side. Both are possible. So let me discuss both the angles. Debit side greater than credit side greater than debit side. Third one we need not discuss. Third one is both are equal. In that case, no discussion, sir. It is a stock control account. Sir, are you getting the point? Now first situation. Let us assume debit balance. Here it is 1,20,000. Credit balance is only 1 lakh. Sir, are you getting the point? Debit side is how much, sir? 1,20,000. Credit side is how much? 1 lakh. Now can you please tell me what might be the reason? That means some item is missing on which side, sir? Credit side. Some item is missing on the credit side. Can you tell me which item it is? If some item is missing, can you tell me which item it is, sir? Just guess, sir. What might be that? Because stock is not getting reconciled. Everything we have recorded selling price only. Opening stock, goods received, sales, then goods returned, closing stock, everything related to goods only, and everything recorded selling price. It should tally, but it is not tallying. Credit side, some item is missing. What might be that? Loss. Hello, it is what, sir? Abnormal loss. Hello, everybody. It is what, sir? Abnormal loss. So how we will record abnormal loss? What we'll write here, sir? For abnormal loss, what we'll write? By? Hello, what we'll write, sir? By branch P&L. Shall I write by branch P&L? Shall I write by branch P&L or by branch adjustment account? Shall I write by branch P&L or adjustment account? Sir, branch P&L, branch adjustment. Branch P&L, branch adjustment. Now, look here carefully. First, before proceeding to this discussion, let me tell you the purpose of branch adjustment. Then you will get a better clarity. In branch adjustment, what we will do? We'll record the profit of opening stock. Hello, what we'll do? We'll record the profit on opening stock, loading on opening stock. We'll record the loading on goods sent to branch. Hello, we'll record the loading on goods returned. We'll record, of course, sales not required. We'll record the loading on closing balance. If we record all the loadings, all the profits relating to opening stock, relating to goods sent, relating to goods returned, relating to closing balance, now what is left, sir? Profit relating to units sold. In other words, that gives you GP. That gives you what, sir? GP. In other words, if they are maintained at invoice price, which accounts give you gross profit? Branch adjustment. Which accounts, sir? Branch adjustment. Under stock and debtors method, if we are following cost price method, which accounts gives you GP? Branch stock account. If you are maintaining under invoice price, which method gives you GP? Branch adjustment account. Sir, have you understood? Now please observe carefully. Now if you write in branch stock account, by branch adjustment, that means what will be affected? Can you tell me? Your gross profit will be affected. Am I right or not? If I write by branch adjustment, which profit will be affected? Gross profit. If I write by branch P&L, net profit will be affected. Now tell me, gross profit should be affected, net profit should be affected due to abnormal loss. What is the treatment of abnormal loss? Where you will record? Trading a P&L. Where you will record, sir? Trading a P&L. Sir, usually out of the goods purchased or out of the opening stock only any abnormal loss happens. Am I right or not? Some of these goods only might be taken away by somebody. Tell me one thing, abnormal loss, trading item, trading loss, non-trading loss. Trading, non-trading. That means in the course of business, somebody coming and taking away is irregular. Hello, if you say trading loss, somebody coming and taking away or fire coming and destroying, is it regular? No sir, it's a non-trading expense. That's why what we do, we eliminate that expense, because when we have recorded purchases only, already we are recording the expense. Now we eliminate it by writing by abnormal loss, because it's a non-trading loss, because ultimately it is a loss only. Now once again in P&L, we'll book it as a loss as 2 abnormal loss. I think you might have seen 2 things, sir. One in trading account by abnormal loss, another one in P&L 2 abnormal loss. Reason is very simple. When you have recorded 2 opening stock or purchases, at that time only you are booking the loss. Now it is eliminating the loss in trading and booking it in P&L, because it is not a trading loss. Suppose it is normal loss, we will not eliminate as by normal loss. Why sir? Normal loss happens in the regular course of business. It's a trading loss. When you have recorded 2 purchases or 2 opening stock, at that time only expense record will not disturb at all. We will not disturb. That's why normal loss will not be recorded separately, whereas abnormal loss will be recorded by eliminating in trading account and incorporating in P&L. Normal loss will not be recorded separately, because when you have purchased or when it is there in opening stock, already it was booked as a expense or loss. Have you understood anything, sir? I'm just moving quickly. Have you understood, sir? Okay, right. Let me continue. Now what I want to say is, sir, abnormal loss should be eliminated from trading account and should be booked in P&L. Okay, right. Now look here carefully. That means ultimately abnormal loss gets booked where, sir? P&L. Hello, where it is getting booked, sir? P&L. Now what I will do is, to the extent of loading, hello, to the extent of, because this might be there either in opening stock or goods, that goods only are getting destroyed. So to the extent of loading, because I want proper profits relating to trading account, so to the extent of loading, I will write by branch adjustment. To the extent of cost portion, I will write by abnormal loss and later on transfer to P&L. Have you understood, sir? 2 portions are there. One is loading portion, the other one is, sir, 2 points are there. One is loading by branch adjustment. This is for loading, sir. The other one is for by branch P&L. Or of course you can write by abnormal loss. Later on in P&L you can write branch P&L, you can write 2 abnormal loss. It is okay. Now I'll tell you the reason, sir. Because in branch adjustment what we are doing, we are writing profit for everything, for opening stock, for purchases. Then for the items left as closing stock, we are removing the profits. If some items are destroyed, related profit also to be removed, then only you will get profit relating to the units sold. Are you getting the point? That's why the profit relating to units destroyed also should be recorded in branch adjustment. That's why we record there for the loading portion by branch adjustment. Cost portion is the real loss, sir. It should be recorded where, sir? P&L. Because we eliminate in trading and ultimately record in P&L only. So that's why we record in P&L. For recording in P&L, we write by abnormal loss. Hope everybody have understood. So this is the way of recording normal loss and abnormal loss. Suppose it is normal loss. How do you record in branch stock account? Normal loss means where it should be recorded? Trading only. We will not record in P&L. But whether it is normal units lost or abnormal units lost, any units lost profits should be reduced. Then only I'll get profits relating to the units sold. So thereby entire amount should be transferred to branch adjustment only, because relating to normal loss, nothing will record in P&L. Everything will be recorded in trading only. That's why trading means where it will be recorded? Branch adjustment. So please remember, sir, if it is normal loss in branch stock account, we write by branch. If it is normal loss, we'll simply write by branch adjustment, because entirely is a trading loss. Normal loss is what, sir? Entirely trading loss. Even that profit also to be eliminated from trading only. Secondly, if it is abnormal loss, what we will do, sir? Two portions will be there, loading portion and cost portion. If it is loading portion, we will write branch adjustment, because unless we remove profit relating to the units destroyed, we cannot get the profit relating to the units sold. That's why we transfer to branch adjustment. And this, because we have to book in P&L, we will write branch P&L or abnormal loss. First you can write abnormal loss, later on you can transfer to branch P&L. So this is the discussion relating to normal loss and abnormal loss. And now we are analyzing the reason here, sir. If at all debit side is greater than credit side, that reason might be normal loss or abnormal loss. But normal loss usually given in the question. So if nothing is given, we assume it as abnormal loss. If they give any normal loss, first we will record that. Still if balance is there, that we once again assume as abnormal loss. In that way, we will record the balancing figures. Sir, discussion clear? Everybody discussion clear? One last point was possible. What is that, sir? If credit side is greater than debit side. Hello, what is that? If credit side is greater than debit side. That means, suppose credit side is not 1 lakh, credit side is 1 lakh 50. Debit side is 1 lakh 20. Now, what might be the reason for this, sir? Is that possible? Yes, sir. Sometimes credit side might be greater than debit side. In such a case, what might be the reason? Tell me, opening stock will be recorded, invoice price, goods sent to branch, invoice price, branch debtors, goods returned, invoice price, closing balance, branch cash and branch debtors, selling price. Which price? Usually invoice price will be the selling price, because invoice price is nothing but we fix, sir, at this price you please sell. That is what invoice price. You please make an invoice at this price. That's why we say invoice price. Sometimes because of higher demand or lower demand, actual sale value might differ. We thought that this opening stock cost is 100. We have asked to sell at 25. That's why we have booked a loading of 25. Now later on, because the demand is very high, maybe festival or some other reason, we have sold that unit at 150. Now tell me, here 125, here 150, excess profit was there or not? So difference is possible or not? Yes. Sometimes credit side is more, sir. What might be the reason? The reason might be very simple. Selling price might be more than the invoice price. If selling price is more, that is extra sales for us. That is extra profit for us. Trading profit or not? Yes. So simply we write to branch adjustment. That is also our trading profit. In that way, we'll close the branch stock account. Branch adjustment, exactly said, no, sir. That profits loadings alone we have to record. The difference only we'll call as gross profit. This we will transfer to branch P&L. There we write branch expense and record in the normal way. Sir, have you all understood, sir? Sir, is that clear, sir? In this way, stock and debtors method will be maintained at which price, sir? Invoice price. Now just I'll open a question. I'll not show you all the ledger accounts, sir. I have taken a lot of time. I have said somewhat slowly because some good intricate points are there. I'll just show you directly that branch stock as well as branch adjustment. Balance accounts will leave. So let me show you one question, sir, where we can look after those two. So maybe let us move to an assignment. Just wait. Assignment 5. Okay, for this question we should maintain under invoice price, sir. Every record was there. We have to maintain under invoice price. Now the page number 35. Okay. So let me show you, sir. Just I will show you only that part which is related to the branch stock as well as branch adjustment. Please look here, sir. In this question, goods were received from head office at invoice price. Returns also at invoice price. I will just record, sir. Now received at invoice price. Returns also at invoice price. Similarly, opening stock at Bangalore. So that is 4,50,000. We'll assume that is also given at invoice price. Then closing stock also at invoice price. I'll record the closing stock at invoice price. Now similarly, returns were there, sir. Sales returns. This also will be there at invoice price, because usually sales also will be there at selling price. Then there is some cash sales and credit sales. Cash sales will record. Credit sales will record. Credit sales will write as what, sir? By branch debtors. So usually this will be there. Now once we have recorded all these things, we'll observe the difference. In this question, credit side is 51,90,000, debit side is short, sir. Hello? Credit side is 51,90,000, debit side is short. What might be the reason? Nabits will have said selling price might be more than the invoice price. We'll simply transfer to branch adjustment account. Similarly, the corresponding loadings, sir, you could observe opening loading on opening stock, we'll write here. Similarly, loading on goods sent, we'll write here. Similarly, the loading on goods sent to branch, we'll write here. Similarly, the loading on branch closing stock, we'll write. I think that was missing somewhere. Okay. So here only recorded, but loadings on branch stock. Here they have recorded on a net basis, sir. 45 lakhs minus 90. Together they have recorded loading on a net basis. Now the difference will be the branch 2 will transfer to branch P&L. It is nothing but the gross profit. In this way, we will maintain stock and debtors method at invoice price. Sir, shall I proceed? Sir, everybody, shall I proceed? With this, I am closing dependent branches. The two, both methods we have discussed comprehensively, sir. So, debtors method as well as stock and debtors method. Now, let me proceed to the other aspects, sir. What are the other aspects? I have said you, one is inter-branch transactions. The other one is reconciliation or rectification entries. The last one is foreign branches. Let me tell you, unless we know this entries to be recorded in both the branch as well as head office, we cannot pass any rectification or reconciliation entries. First, I will discuss for various transactions what are the entries that will be there in head office and branch. Then only we will have the clarity. Shall I start, sir? Now first remember, we are maintaining records both in head office as well as branch. Hello, we are maintaining records both in head office as well as branch. Okay, let me start, sir. First, two things will be available. One is head office books, the other one is branch books. Now, I'll tell you one simple way to remember these entries, sir. Many entries will be there. I'll tell you one simple way. Usually, what transactions will record, sir? Transactions between head office and branch. If it is with outsider, why we have a link, sir? We'll write normally only, not a big issue. Usually, all these transactions, most of the times, might be related to head office and branch. Usually, in any journal entry, 100% we may not know, sir. At least we know 50%. What is to be debited or credited, we know sometimes. We don't know the other aspect. Am I right or not? Now, in branch accounts, if you know one aspect, if you don't know other aspect, if you know one aspect, if you don't know other aspect, suppose you are recording in branch books, suppose you are writing something to bank, debit should be head office. Hello, sir, are you getting the point? Difference is head office, because we are writing the transactions between head office and branch. Head office should be debited or credited. If you are clarity on one aspect, other aspect should be definitely head office. Suppose you are recording in head office books, you have written something debited bank, credit should be branch. Hello, no big thinking, sir, required. Logically speaking, a simple way to answer any journal entry, sir, because one aspect you usually answer, sir. You can easily answer to cash or to bank or expenses or depreciation, everything you can answer. The aspect you don't know, simply transfer to head office or branch, depending on the books you are writing. Now let me read these entries. You will feel this very, very simple. Once you know the simple logic, entries will become very, very simple, sir. Just let me show you. Sir, dispatch of goods. First, let us see in head office books, sir. Then we will see in branch books. First, dispatch of goods to branch by head office. Now, simply look at one aspect, sir. One aspect should be clear. Now, we are sending goods. We are whom, sir? Head office. Goods were sent by head office. Goods will be credited. Other aspect branch. Over. Hello. Goods will be credited. Other aspect is branch. Next, goods were returned by branch to the head office. We will receive goods. Other aspect branch over. Hello. One aspect will be very, very clear. You record that. Other aspect should be branch account because we are recording in head office book. Branch expense are paid by branch. You are not involved, no entry. You are not at all involved, no entry. Branch expense is paid by head office. We have paid. That means bank balance will go. You have paid. So bank balance will go to bank. Debit, branch, over. Sir, don't look at the other aspect. Look at only one aspect. Automatically other aspect you can fill. Suppose outside purchases made by branch. Branch purchased means we will not have any entry. Sales affected by branch. Branch have done means no entry. We'll record only between. Collection from debtors of branch received by head office. Please understand. Branch debtors have paid some money. Who have received it? Head office. Forget about everything. You have received cash. Debit cash. Credit branch. Over. Only look at one aspect which is very, very simple. Automatically other aspect will go to branch. No big logic required, sir. Because definitely other party has to be branch only. Sir, is that clear? In that way you will never write wrong, sir. Everything will be correct only. Payment made by head office for purchase made by branch. We have done what, sir? Payment. To bank. Debit will be branch. Over. Sir, is that clear, sir? Similarly, purchase of asset by branch. We are not involved. Leave it. Asset purchased by branch, but asset retained in head office. Asset retained in head office. So asset account debit, credit is branch. Over. Hello. Sir, are you getting the point? Because they are telling branch asset is retained in head office. So record the asset balance in branch only. Similarly, depreciation on above. Please understand, depreciation usually is an expenditure, sir. For control purpose, asset account will be maintained in head office sometimes. That doesn't mean expenditure also should be booked by head office. Expenditure will be booked by branch only. This is one specific point you should remember. So thereby depreciation has to be recorded in branch only, whether you have directly purchased it or branch has purchased it. Depreciation should always be recorded in branch only. But because of depreciation, what should happen? Asset balance should reduce. Am I right or not? So asset we will reduce, balance to branch. Over. Hello? Because we are maintaining asset account, because of depreciation, asset balance should reduce, balance to branch. Remittance of funds by head office to branch. We are remitting funds. So cash should go out, balance to branch. Remittance of funds by branch to head office. We are receiving funds, balance to branch. Sir, have you understood, sir? Any confusion? Becomes very, very simple, sir, when you look at one of the basic aspect. Let me quickly tell you in branch books what will be the entries. Just look at one aspect, sir. Other aspect you simply transfer to head office from now onwards. Dispatch of goods to branch by head office. We have received the goods. So goods we will debit, credit, head office. Over. Goods are returned by branch to head office. We are returning goods. So goods should be credited. Other aspect should be head office. Branch expense are paid by branch. So we are only doing everything, sir. So double entry required. So thereby branch expense to cash or bank. Next, branch expense paid by head office. Who have paid? Head office. But we have to record expense. Hello. Expense you debited, balance head office. Over. We have not done payment, but we should record expense. You record expense, balance to branch. Sorry, head office. Outside purchase made by branch, regular purchase to creditors. Sales, regular debtor to sales. Collection from debtors of branch received by head office. Now cash received by head office, but understand for us what is the impact? Debtor balance should reduce. Debtor balance should reduce. So debtors will credit, balance to head office. Sir, are you getting the point? Payment by head office for purchase made by branch. So what we have done for us, what, sir? Purchase. Hello, for us what, sir? Purchase. So we'll record purchase. So simply we'll transfer to head office. Sir, are you getting the point? Purchase of asset by branch, asset account debtor to bank. Asset purchased by branch, but asset account retained in head office. If asset account is retained in head office, what is related to us? Only purchase, payment. So we'll record to bank, balance to head office. Because asset account is retained in head office. We'll simply record payment only. Now, depreciation, we have to record depreciation, but asset is not there with us. So other aspect to head office. Whatever we know, you write it, sir. Other one simply transfer to branch account. Over. Then, so head office account. Remittance of funds by head office to branch. Branch was receiving. So receive cash. Other one to head office. Remittance of funds by branch to head office. You are paying. Other one to head office. Like that, any entry is very, very simple. Look at only one aspect. Balance aspect should be the other party. If you are branch, head office. If you are head office, branch, the other part. Sir, have you all understood all the transactions? I think no big thinking, logics is required, sir. Simple way you can remember. But logic is required for the last one, which we call as inter-branch transactions. Logic is required for last one, which we call as what, sir? Inter-branch transactions. Now, what is this, sir? Usually, because of inter-branch transactions, many frauds will happen. Hello? Because of inter-branch transactions, many frauds will happen. Frauds may happen. How, sir? Very simple. Your head office, you are having 3 branches, branch 1, branch 2, branch 3. Let us say in branch 2 and branch 3, what happened is some stock was taken away by the branch manager. Hello? Some stock was taken away by branch manager. Now look here carefully. Head office have gone to branch 1 and started checking whether all the stock was there or not. Proper verification they was doing. Stock was well and good. Branch 1 is very good. So now they are moving to branch 2. Branch 2 fools, they already know that branch 1 completed. Next they will come to branch 2 only. So by the time they come to head office, branch 2, what branch 2 people will do? They'll bring some stock from branch. Hello? They'll bring some stock from branch. Now by the time they verify, now head office also, when they look at branch 2, everything proper. So branch 2 also very, very good. Now branch 3 fools, no. So by the time they come to branch 3, they will bring the stock from the same stock to branch 3. Now when they come to branch 3, everything looks proper. Like that, though some thefts or frauds are committed, now head office cannot identify. If inter-branch transactions are done without any control. If inter-branch transactions are done without any control, so never we can control them. So thereby, what principles we follow is, if any branch transaction happened, sometimes possibility is there, sir. Head office may be at a distant place. One branch require goods immediately for selling to a particular person. Then you cannot wait for head office. Branch transactions may happen. Sometimes a particular branch require cash. You cannot wait for head office to send the cash. Branch transaction may happen. But what is the problem of head office is, branches are cheating head office. That's why what head office require is, for every inter-branch transaction, head office should be involved. Hello? For every inter-branch transaction, who should be involved? Head office should be involved. So that's why, suppose there is a branch transfer from B1 to B2. Now we should not record like B1 has transferred to B2. This is not correct. We should involve head office. We'll assume that B1 has transferred to head office has transferred to books, B2. That means in head office, we have to record these entries. Sir, are you getting the point? In this way, now every transfer will be known by head office. If it is legitimate, head office will not do anything. If it is illegitimate, they'll understand intention behind them. In this way, we will be controlling. Suppose there is a transaction from one branch to another branch. Now, 2 branches will be there. One is supplying branch. The other one is receiving branch. Sir, are you getting the point? Recipient branch. Now, what the supplying branch will do? They feel that it is a transfer to head office. Entry will be what, sir? Head office account debtor to goods sent to branch. Is that clear, sir? Then we feel that these goods are received. B2 will feel that goods are received, sent by head office. So what they will do? Goods sent to branch to head office, because they feel that goods are received from head office. Now what head office will do, sir? Now they feel that goods are received from B1. That is B1 they will debit, sir, branch 1. Now they will receive goods, sir. Goods sent to branch to B1. Now they are sending the goods to recipient branch. So thereby B2 to goods sent to branch. But instead of writing 2 entries, we write a combined entry. What is that? BT to B1. In other words, recipient branch we will debit, sir. Supplying branch we will credit. That is the net entry we pass. Sir, have you understood, sir? I could have communicated directly, but this is the logic, sir. Once you learn logic, never you will forget, sir. This is the reasoning. Now let me show you. Recipient branch to supplying branch. In supplying branch, head office to goods center. Then recipient branch, goods received to head office. Sir, have you all understood, sir? So these are the inter-branch transactions journal entries, sir. First question will be same, sir, which is purely based on goods sent, goods received, cash sent, cash received. Same thing we have to do, debit the receiving branch, whether it is goods or cash. They may send cash, they may send goods also, because if the cash is sent also, same way sir, we feel cash is sent to head office sent the cash to branch. In that way we record sir. So thereby always receiving branch we have to debit, supplying branch we have to credit. So here we, after recording all those things, now some branch may have debit balance, some branch may have credit balance. Everything will write a single journal entry in the case of question number 1. Sir, shall I proceed sir? Next, the main point is rectification entries. Let me quickly deal with this rectification entry of question number 2 sir. Sir, here for this rectification entry, I can tell you one thing. If you know the journal entries properly, rectification will be clear sir. But these are not just rectification entries, these are reconciliation entries also. Sir, please understand one thing. To reconcile, that means to record for the organization as a whole, just like in the case of consolidation, any mutual owings will eliminate or not. Between holding and subsidiary, any mutual owings we will eliminate. Here also sir, whatever head office balance was there, whatever branch balance was there, both should be same. In head office books branch balance, in branch books head office balance, both should be same. Otherwise how transactions will happen sir? Both should be same. If both are same, reconciliation will happen. Sometimes both may not be same, because one party may have recorded the transaction, other party may not have yet recorded the transaction. At that time what we will do? If one party has recorded, balance party has to record, then only reconciliation can be done. Are you getting the point sir? Sometimes head office may send the goods to branch sir, it may be still in transit. Head office might have recorded, but branch might not have recorded, in which case both the balances will tally. Yeah, no. So then we will record in branch so that both will tally. Like that reconciliation entry is also required. One for wrong recording, the other one for reconciliation. For both these purposes entries may be required. Let me quickly discuss those. Shall we do it sir? Within 2 minutes we'll complete these entries. Don't worry, branch accounts being a big topic, I'm taking 1 hour 20 minutes. Financial statements and cash flow can be completed quickly compared to branch accounts. Okay, right. So let me proceed sir. Head office expenses 3,500 allocated to branch but not recorded in branch books. Everything please record. They are telling pass necessary journal entries in the books of branch A. So that is what they are telling sir. Head office expenses allocated to branch. For branch it is what sir? Expenses only. Am I right or not? So what is the entry? Expenses will debit. Balance to head office. Same logic. Next, second entry, depreciation of branch account assets whose accounts are kept by head office not provided earlier. That is not provided. Now we have to provide it. We have to provide depreciation in branch sir. So depreciation will debit, but asset is not there with us. So thereby we have to credit head office. So depreciation to head office. So hope it is clear. Next, a remittance of 15,000 sent by branch has not been received by head office. Now who have already recorded? Branch. Who has not recorded? Head office. Who has to record? Head office. So branch will not record anything. So in branch books we will not record anything. No entry will be the scenario. Next, branch A incurred advertisement expense on behalf of branch B. Sir, if it is inter branch, simply look who is receiving, who is supplying. Who is supplying sir? Branch A. Because incurring means paying amount only. Who is supplying? Branch A. Who is receiving? Branch B. Now we are recording in whose books? A's books. What we feel? We are sending to head office sending to branch. So we feel that payment is done, but for head office. So for payment we'll record to bank, balance will debit head office. Is that clear sir? The same entries. Next, income of 2,800 allocated to branch by head office but not recorded to income account. So difference will be head office. So head office to income. Next, branch paid 3,000 as salary to head office manager, but the amount has been debited to by the branch to salaries. So they have paid to whom sir? Head office manager, but wrongly debited to salaries. That means they have debited as if it is branch salaries, but actually it is head office related. So thereby wrongly debited to salaries, hence salaries should be credited. So to be debited to head office but not debited. So we will debit head office, credit salaries. It is rectification sir. Next, Branch incurred traveling expense of 5,000 on behalf of other branches but not recorded in the books of branch. Our branch incurred something on behalf of other branches, sir. We feel that this payment was done to head office paid to other. So thereby if we have done payment to bank, the difference to debit to head office. Sir, are you getting the point? Just remember that one logic, sir. Entries will be very, very simple. Next, head office collected 30,000 directly from a branch customer. Now only we have received the intimation. Branch customer. So thereby debtors should reduce. So we will credit the debtors, debit to head office. Next, goods dispatched by head office amounting to 10,000 but not received by the branch till the date of consolidation. Reconciliation. Goods have been received subsequent. Who have sent head office? Who have recorded head office? Who have not recorded branch? Now we will record stock in transit or goods in transit to head office. Over. Sir, have you all understood this question? Rectification entries or reconciliation entries also very, very important. Over. Now let me move to the last concept, sir. Foreign branches. Within 8 minutes we'll close this, sir. We'll close by 4:20 branch accounts. Okay, right. Now look here carefully. Simple, sir. Foreign branches we'll divide into two branches. One is integral, the other one is non-integral. Integral means we feel it is part of our business, sir. It's just like an expansion of our business. Non-integral means we are giving amount, they are doing their own business, they are giving us returns. That is what we feel. Hello, are you getting the point, sir? Integral means it is part of our business, it is like an expansion. Whereas non-integral means we are just giving amount, they will do business, they will do everything, they will just give us the profits. That is what non-integral. Now integral, we will only supply goods, we will give whenever cash is required, we will do help various things. So that is part of our business. That is what integral and non-integral. Now we should know one point, sir. For the purpose of foreign branches, particularly for recording, items are divided into two types. One is monetary items, the other one is non-monetary items. What are monetary items, sir? Name itself conveys that monetary items refers to any assets expressible in terms of money, either receivable or payable. Either receivable or payable. That means cash will be monetary. Similarly, debtors will be monetary, creditors will be monetary. Usually cash, debtors, creditor, loans receivable, loans payable. So these are the monetary items, sir, usually. Now all other items which cannot be exactly expressed in terms of money, they are called as non-monetary items. Now, sir, what we will do in the case of integral and non-integral? Very simple. So in the case of integral operations, now we have to know just the translation, sir. Monetary items, non-monetary items, then P&L items, opening stock, etc. I should just tell you the rates which you should pick, sir. So if it is monetary, whether integral or non-integral, we will follow closing rate. Which rate, sir? Closing rate. Because it is related to money, sir. When dollar value changes, that also has to change. If it is non-monetary, if it is integral, we feel it's part of the business, sir. That means we feel that fixed asset is also our fixed asset only. If it is our fixed asset, tell me due to foreign exchange difference, fixed asset efficiency will increase or decrease? Nothing. So thereby that should not be adjusted to asset account. For that reason, it has to be recorded only at the beginning value, not at any changed value. Because if we write at closing rate, that means you are indirectly changing asset value. Asset cannot be increased or decreased for foreign exchange difference. Its efficiency is not increasing or decreasing. That's why we write on the date of purchase, whatever is rate is there, that only we will follow. If it is non-integral, we don't feel it is our business. We have just invested money. It is just like a receivable amount for us. In that everything will be there. May it be cash, may it be stock, may it be fixed asset. We don't bother because we don't feel it is our fixed asset. So simply everything is receivable, money receivable, investment receivable. So we'll simply record at closing. Have you understood, sir? Anyway, if you have understood logic, very good. Otherwise, simply remember. Okay, right. Next, P&L items. So whether it is integral or non-integral, average, sir. Because different incomes or expense are incurred at different rates, we have to simply record at average. Opening stock always recorded at opening rate, whether it is integral or non-integral. So these are the rates at which conversion should happen. Sir, are you getting the point? And sometimes you may have head office balance. Similarly, goods sent to branch, etc. Now these balances because will be simultaneously there in branch also. Hello. Head office, if you are having in head office branch, that means in branch also what will be there, sir? Head office will be there. If you are having goods sent to branch, for them is goods received from head office. That means these values will be there in rupees also. If you are, sir, let us assume you are there in one country, they are there in another country. Now, at least one party will record in rupees. Other party is foreign, one party will record in rupees. Simply take the values of the party who are recording in rupees. In other words, home country, directly you will get the values. No need of any conversion rate. In this way, trial balance conversion will happen. Sir, have you understood, sir? Let me quickly show you through a question. I'll take only one branch, sir, integral branch. Just wait, sir, I'll show you. CRD 8, sir. Okay. Everybody look here, sir. I'll just show you the rates at which conversion will happen, because most of the other things will be simple only. Now look here carefully, sir. Head office is there, 22,800. What we will record, sir? Now you could observe, sir, branch is having at Mumbai, whereas head office is, branch is having recordings in dollars, sir. Now we head office in India, head office at Mumbai, sir, India. Branch is in foreign country. That's why we say foreign branch. Now look here carefully, sir. Head office account maintained at what, sir? 22,800. Simply go and look into in head office books what is the branch balance, because in head office it is available in rupees. So directly you will record it 8,60,000. So in this 22,800 head office balance, you will simply record it what, sir? Actual 8,60,000. Similarly, now sales, I'll just show you various terms, sir, directly. Now in this question, what is opening, sir? 46. Closing is 48. Average is 47. I'll show you various items, sir. Machinery, it is the rate on the date of purchase. Neither of those three. Opening stock, opening rate 46. Goods from head office, will directly take the actuals, because in branch it will be available. No, goods sent to branch, so same will be there. Directly will record 29,26,000. Then sales average, expenses average, debtors closing, creditors closing, cash at bank closing. So head office actual, the difference will be there. If it is integral branch, difference should be transferred to P&L, because it is our exchange difference. If it is non-integral, we'll transfer to foreign currency translation reserve. So like that we will transfer. So this is the scenario, sir. So you have to be careful sometimes just in computation of stock, etc., sir. Just be careful. Look at the question. I think you can understand. Just mainly what is required is this conversion, sir. Monetary and non-monetary items. One or the other issues will be there. In this question, for suppose, one big issue will be computing the gross profit, sir. Hello, what is that? Sorry, computing the closing stock. Hello, what is that? Computing the closing stock. Because everything was available in head office in dollars. Because you know sales in dollars, you know opening stock in dollars, you know goods received also in dollars. Hello, are you getting the point, sir? So you can observe goods from head office in dollars, opening stock in dollars, sales also in dollars. Now can you find the closing stock, sir? Yes, provided sales should not be recorded at that selling price, we should record at cost price. Because what is cost of goods sold? Opening stock plus purchases minus closing stock gives you cost of goods sold. So if you find the cost of this, you can find the cost of goods sold in terms of dollars. Then we will convert into rupees, closing stock at closing rate. Now in this question, you could observe how they are sending. Goods are sent to branch at cost plus 10%, and branch sell goods at invoice price plus 25. Invoice price is nothing but the price received by the branch. 100 plus 10. Sir, 100 plus 10, 110 is the invoice price, plus 25% sale is being done. Can I say for branch this 110 is cost or not? So can I say this is cost plus 25? Yes. So please understand, sir, it is cost plus 25 for branch. So that means this is sale value for branch. So that means on sale how much? On cost 1 by 4, on sales 1 by 5. In that way we'll eliminate the profit. 84,000 into 1 by 5 is profit portion. 4 by 5 is what, sir? Cost portion. So this is cost of goods sold. If we reduce, we'll get the closing stock in dollars. Apply the rate, you will get the closing stock in rupees. Closing rate. So in this way we will compute, sir. That's all. With this we are closing branch accounts. Sir, discussion clear? I think I have done some good discussion, sir, covering almost many aspects. Now